The upcoming week for crypto is pretty massive, and the reason is we have the final inflation data. The inflation data that we will see from August, the final inflation CPI data before FOMC, which is going to be taking place in 9 hours, 9 days, and 22 hours' time. That's massive. This specific FOMC meeting has been a very largely anticipated meeting. There is an expectation of currently it should be over 90%. Let's hope that it is. Yeah, well, there's a 100% chance that there's going to be a cut of 25 basis points. And right now, there's even an 11% probability that Fed Chair Powell decides to reduce rates by 50 basis points. That's a massive change. That wasn't there pre-jobs data on Friday. So huge expectation of that. There is an expectation also that inflation increases on August. Could that change up the probabilities for interest rates? Yes. And how would that impact? Like, so many questions regarding what is going to be happening this week. Apart from CPI, we also have the treasury auctions, very, very significant. So I want to go into all of those key sort of determinants of what Bitcoin can do with the economic data in the upcoming 5 to 7 days. And on top of that, I want to conduct some short-term price analysis with liquidity and long-term price analysis through the influences of analysts like Bob Lucas. A chart that he shared really caught my attention, and the wonderful Jamie Coots that went on my channel Friday. I uploaded the podcast yesterday, and he described Bitcoin's correlation with liquidity in a phenomenal manner and gave predictions on altcoin season. Jamie, by the way, is the chief crypto analyst at Real Vision. You may know Real Vision from obviously Raoul Pal. So wonderful person, incredibly knowledgeable, and I want to cover all those different things and give you a good insight and good update onto what I personally think is going to happen to Bitcoin in the long term and short term. So if that sounds interesting, then make sure to, as always, destroy the like button, crypto kids. You've been doing a phenomenal job with that over the past 2-3 months. I'm really happy, and I'm also really happy about the fact that we crossed 56,000 subscribers. Which is unbelievable because I think that's higher than the population of Monaco. So, wow, there are more crypto kids than the population of an entire country. It's just unbelievable to me. So, guys, thank you so much. In exchange for all your support, I always try to do my level best to get you the best bonuses with our partnered exchanges. And right now, I'm going to put this as the first link. There is a wonderful campaign going on with Coinflare. So if you actually click the Coinflare link, this link in the description, you're going to be forwarded to the following campaign page, which is going to give you $50 worth of trading bonus. So you can use this $50 to trade a derivatives contract, and all the profits you make from this derivatives position, you can withdraw. It will be completely yours. And all you have to do to get that is actually sign up using the Register Now button on the campaign page. Fill in your details, can take you less than a minute to do so if you have your email ready. There isn't any KYC requirement for claiming that specific bonus. All you have to do is, after you create your account, with this link in the description down below, you need to deposit either 100 USDT or more, and every single day, after you've done that basic requirement, every single day Coinflare is distributing a one-time voucher of 50 USDT. It's a futures bonus, which over on the derivatives platform, you will be able to see a small switch on derivatives. So that switch will enable you to use the futures bonus instead of using your own funds to open a position. And every single profit that you make from using those funds, you can actually withdraw. So it's a phenomenal campaign. If you want to take advantage of it, it's going to be the first link in the description down below. Coinflare is the exchange. With that said, let's cover why this week is so significant. So obviously, CPI data is on Thursday, final inflation data before the FOMC. The producer prices equally, not equally, but pretty important. That's happening on Wednesday. We're going to be streaming the inflation data, the CPI data, on Thursday over on the Moonshow channel, as we always do. So that's coming in. And the expectation of CPI is actually 2.9%, higher than the previous 2 months of inflation. And that's concerning to me because if inflation is rising And the job market is, you know, I wouldn't call it the best. You have a rising inflation, you have a job market that's not doing great. The dual mandate of the Fed is to reduce inflation to 2%, that's the target, and to have a healthy job market, to have a healthy job economy. So while those things are not meta targets, if you're reducing rates and you're easing your monetary policy, in my opinion, that leads to catastrophe in the long term. So now, if you look at the probabilities of the Fed cuts in 9 days and 22 hours' time, there is actually no chance that they keep things the same according to the CME group. There's an 89% chance that they cut rates by 25 basis points, and now there's an 11% chance that the Fed cuts by 50 basis points in the September meeting. So, look, if they do end up cutting rates and inflation continues to increase in future CPIs and the job market is doing worse potentially, then that will, from my perspective, lead to a recession in 2026. I think initially it will cause excitement and it can cause liquidity to go into Bitcoin and altcoins during Q4, but reducing rates significantly when technically you shouldn't be doing it can fuel a bit of a crisis, and I think that crisis and price action will be reflected next year. But Q4 I think will be fine. 25 basis point cuts is on the charts, priced in, again purely based off of my analysis, but I think a 25 basis point cut is already priced into the chart. So if they cut by 25 basis points, will we pump? I can't say. It's these events are very unpredictable in their nature, but due to us expecting a 25 basis point cut for a long time, I think if we do see it, then there is a higher chance that we may correct in price action over the next, let's say 6 to 12 hours as to going up. That's what I would say. I could be wrong. Let's see, maybe altcoins see a little bit of a increase, but Bitcoin is a bit more stagnant. We will do that analysis live, as we will stream the FOMC events over on the Moonshow channel too. We will see. The real issue would be if they don't cut rates. If they don't cut rates, then that's a major issue for Bitcoin and altcoins. But if they cut 25, let's see, maybe a 50 basis point rate cut would cause a dramatic surge in price. We will find out. It's in only 9 days time from now, and it's definitely going to be exciting, one of the most exciting FOMC events to date, I would say, at least from the ones that I've been covering. Okay, so that's the inflation data, 2.9% higher than expected. We covered that. Producer prices, we'll get into it in tomorrow's video and the day after's video. It's not so urgent to cover it on Sunday, I would say. I think we can get into it tomorrow. So make sure that you're staying tuned for the next two uploads. We will cover producer prices in the next 48 hours. And finally, in terms of economy, we need to be taking notice of the auction of the treasuries. If the treasury auctions are weak, that can also cause a little bit of bearishness and a little bit of a negativity and negative sentiment over on Twitter, because if they don't sell the treasuries that they need to sell, the central bank, if they're not able to do these auctions and there's not much demand, then there will be concern on how they will be able to pay off the 7.6 trillion in totality for this year, the amount of new bonds that they need to issue to pay off their debt. There will be question marks. There will be pretty significant question marks. And the printer is coming meme is very, 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 very appropriate at this moment in time, because if they don't end up printing money in a time of potentially weak demand for treasuries, then the government would go bankrupt, and that's not going to happen. So let's see. I just think that the next 10 days with the FOMC and all this data will be super, super important. We'll break it down as we go along, but we could end up in a place where the government has to print a bunch of money if this treasury auction is, through other ways of treasuries and issuing debts via bonds. That's one of the ways that governments print money, right? But they're going to have to raise this capital somehow, because otherwise, if they don't raise the 7.6 trillion, then the government goes bankrupt. You can't let the government do that. So they always find a way to compromise, and they always find a way to increase the cap for going bankrupt, they always find some compromises and they will keep doing that. And the more they do that, the more that liquidity increases. The more liquidity increases, the more risk on assets, which include Bitcoin, the more they go up. And when you go into the very, very macro, you can see that things like Bitcoin, things like the S&P 500, things like even gold, they just go up forever and ever and ever and ever and ever because the value of the underlying dollar, which you're measuring these assets against, that's going to zero. Over time, it's losing so much of its value due to this endless cycle of printing money to pay off your debts. Assets go up. And if you don't want to become broke, then please research these cycles of liquidity and research monetary debasement and understand how money works. Because if you don't understand how money works, you're going to get trapped because all these assets will go up in value on your screen, but it's not because these assets are actually like getting tons of adoption and tons of buyers. It's not really because of that. It's because the underlying dollar is weakening and investors need to, the smart investors, they flee into these assets to protect themselves from the dollar keeping cash and that going to zero over time. So in the long term, it's very important for me to have my cash not be in my bank or in let's say a safe. I keep my cash, I keep my capital in things like Bitcoin, in things like the S&P to make sure that I'm not losing my dollar value every single second that passes. That's what I do. I keep it in things like Bitcoin, the stock market newly, and that's a long-term approach. But in the short term, can you have bear markets? Of course. And that's what Jamie Coots and I went into. We said that, yeah, liquidity is going up and it will continue to go up long term, and Bitcoin will continue to go up long term. That's not a question. The question is, every single 4 years, you tend to see a bear market and things go down in value. Even the S&P. Yeah, this is a massive upwards trajectory and a huge bullish uptrend when you look at it, but there are times where you have crashes. It takes place. Long term, if you're holding, there doesn't seem to be an issue, and I don't think that there's going to be an issue due to the whole liquidity logic. But these corrections can really stress people, give people an anxiety, and that's normal because of human emotions. It's just how humans work. The psychology is understandable. And this crash, these momentary crashes, I think, and Jamie seemed to agree, we could see one of those going into 2026, going into Q1. We could see one of those take place again. And I would agree, based off of how these cycles work, the 4-year cycles. Jamie mentioned that actually, the 4-year cycles may be irrelevant and we focus on liquidity. I would really encourage you to go to the channel and watch that podcast. It's definitely very interesting. Right. And Jamie will explain it better to you than I ever could because he's the master in that. But I think we're going to go into an interesting time where, yes, long-term Bitcoin will appreciate simply because of how much money devalues. But there can be a short-term correction. There can be a correction down as a bear market, standard bear market correction. And the target for that, I would agree with Bob Lucas. I think we can see Bitcoin come down to $69,000 to $70,000. That could very much be the bear market due to the amount of support that we have from price. It's going to be a very strong support. We faced resistance. Obviously, the first resistance was back in 2021 November. Then it took us 8 months to breach that level sufficiently on the monthly time frame to go and hit 100K and beyond, and we came very close down to it following the tariffs. So I think the 69 to 71 to even 72 region is going to be a great place for Bitcoin to hit that bear market low. And after doing so, which I think, if Bitcoin does that, I would be very, very happy. After doing that, we're going to continue Bitcoin's appreciation in the long term, like I said, and whether it's next cycle or the cycle after, I think it's very possible that we see a $1 million Bitcoin. For this specific cycle, I think 140 to 150 is good as a top. Time will tell, very tough to call exact price targets, but I think 140 to 150, 135, 140, 150 looks like the likely outcome for a bull market top, and then the future cycles will be very, very fruitful. I don't really doubt that so much. And I think the way to be as profitable as profitable as you can here is to have a long-term mindset and to keep sticking with this game and not fading out when that potential small correction happens. So that's the long-term approach. And to end things off, the very micro, we can start off with a short-term chart. We still have that very nice inverse head and shoulder on Bitcoin. It's just extending in how long it's taking to see either a break to the upside, which will be the best outcome. If not, we see a breakdown and an invalidation that will be revealed, I would say, by tomorrow. So I like how this inverse head and shoulders looks. I'm still very much long on weeks. You guys know my stop losses. Stop losses are below the bull and bear market support band on the weekly time frame. If we fall below the bull and bear market support band, close below it, you guys know that I expect 92, 93. So let's see, this inverse head and shoulder is sort of my final bullish hope. If it breaks positively and we go above that neckline, above the 113.3, 113.4 level, I think the CME gap closure at 116.8 will be the likely event. And following that, we can reassess on our predictions and see what can happen. However, if we're not able to do that, then sadly, most of the liquidity is currently highlighted at lower price levels. So what CINA says is that Bitcoin continues to struggle below the 116K top buyer cost basis, now locked in a 107 to 113.9K range shaped by liquidation clusters and top buyers cost basis bands. The rebound attempts to remain fragile, driven mostly by leveraged perpetual traders, while spot markets show no signs of deep buy-side liquidity typically seen at durable bottom. So you want to see spot buyers engaging in to mark a bottom, not really liquidation, not really leverage traders. You want to see the volume from actual spot buyers to declare that the low is in. And currently, that is not the case. And unfortunately, the short-term MVRV lower band is at that 92.6K range, where we also have that 54 simple moving average on the weekly time frame. So it's very critical that Bitcoin breaks above this inverse head and shoulder, reverses this terrible downwards trend we have on the 4-hourly and daily time frames, because if we cannot do that, then lower prices, in my opinion, are to be expected. Let's see. I have some hope here. I'm still long, net long. And if anything changes, as you guys know, I always let you know here on the channel. So thank you so much for watching. Have a fantastic rest of your Sunday, and I'll see you all on the next video very soon. Take care, guys, and as always, bye-bye.